I now hand the conference over to Mr. Anand Kripalu, Chief Executive Officer, and Mr. Sanjeev Churiwala, Chief Financial Officer from United Spirits Limited. Thank you, and over to you.
Thank you very much, and very good afternoon, everyone, and a warm welcome to the Q1FY21 results call. First and foremost, I just hope that you and your families are all staying safe. Before we open the lines for Q&A, I want to provide some context for the results that we announced last evening. This was indeed a quarter like no other, and I do hope we never have to experience another quarter like this ever again. For the period between March 24th to May 3rd, Lockdown 1.0 and 2.0, alcohol manufacturing and sales were completely banned in all states in India. From the 4th of May onwards, several states began allowing the sale of alcohol. Off-trade outlets began to open in May and subsequently over the course of the next 2 months. About 80 to 85% of the off-trade outlets gradually opened, including some that were doing only home delivery. So they were not open for over-the-counter sales, only for home delivery in places like Mumbai. On-trade outlets, an important channel for our P&A brand, continued to stay closed pretty much throughout the quarter. Our manufacturing operations also followed a sequential process, with factories being allowed to operate based on the zoning criteria in line with the easing of the lockdown starting from the 4th of May. By the end of June, all our units became fully operational. Having said that, what we have witnessed subsequently in July is that retail outlets in a few cities and a few of our plants had to again shut down temporarily in line with the second wave of localized lockdown announced by various states. So in many ways, this will be a process of 2 steps forward and 1 step back till the pandemic comes more under control. During this period, a positive development on the distribution side for our industry has been that several states have allowed home delivery and online ordering of alcohol, something that we have been trying to unlock for a very long time. While this is still very nascent and the model is still evolving, we do believe that once states see the merit of the model, especially in terms of added revenue and improved compliance while enabling social distancing, there will be a stronger argument for this to sustain. On the other hand, what we also saw in the immediate aftermath of the opening of the industry was across-the-board tax increases in most states. Some of the tax increases were exorbitant, going up to 70 to 75% of the MRP. But the good news is that a few of the states have since rolled it back, including Delhi and Orissa. And we are hopeful that a few more will follow. Since these factors were external, what we did as a management team was to focus on what was within our circle of influence and within our circle of control. And I'm particularly pleased about a few things in particular that we have achieved during this quarter. Supply chain readiness. The team planned ahead and made sure that the startups and shutdowns were quick. This was despite having to navigate a very complex state-level manufacturing footprint and having to procure several permissions to operate, in fact, several new permissions to operate. The team simultaneously overcame many logistics-related hurdles, including labor shortage, and ensured that ramp-ups were faster than usual. This despite putting several safety measures in place to protect our employees, be it thermal scanning, multi-point hand sanitation, frequent sanitization of equipment and facilities, and all while maintaining the appropriate social distancing in our factory. Second, we continue with the rollout of renovated mixes for two of our largest brands, McDowell's No. 1 and Royal Challenge Whiskey, in more markets and supported them with the right levels of investment. We have had an encouraging response to these relaunches and are eager to ensure that consumers across the country experience these new mixes as fast as possible. We redirected our sales force to work more effectively in a virtual world, be it in terms of equipping them with appropriate training or exchanging best practices during the lockdown, or indeed even having virtual connects with our customers. Fourth, we also continue to work with state governments to minimize collateral damage to our industry, including obtaining necessary permissions for production and keeping the route to market open. In parallel to all this, we have been ruthless about discretionary costs. But at the same time, what is important is that we have not shied away from doing the right thing, from investing and supporting our customers, our consumers and communities as per need. We have also supported our TNUs and franchisees, as well as our vendors, to ensure that our ecosystem remains healthy during this very tough time. In service of that, we recently launched Raising the Bar to support the revival and recovery of the on-trade channel. This clearly exemplifies our commitment towards growing the category in the longer term and supporting our communities at the same time. Since we've already talked at length about this program on a separate call earlier, I'm not going to repeat that now. In terms of financial performance, you must have seen the quarterly numbers from our published results, and obviously we will take whatever questions you have. But I think this quarter is full of aberrations, and comparing these numbers year on year is not really an apples to apples comparison. I would just like to put a few things like aging-based provisions and COVID-led obsolete inventory provisions, and these have exerted further pressure on our profitability. In addition to the negative impact of the operating leverage due to significantly lower volumes in the quarter, we believe that a part of these provisions should reverse over the course of the coming year. Looking ahead, we will have to navigate several unknowns over the course of this year. As the pandemic continues to surge in India, the containment strategy being adopted by state governments in waves of localized lockdowns could lead to temporary closure of manufacturing sites and retail stores in phases. This is likely to be the environment within which we will have to operate in the next few months or quarters, and therefore maximizing the opportunities presented to us each day while being agile to move from one day to the next will determine how successful we really are. Additionally, the real impact of recent tax-related price increases on demand will also become fully known and much clearer over the next few months, especially given the fragile state of the economy as well. Another variable to watch out for and plan for is the change in consumer behavior in the aftermath of the crisis, particularly the change in the ways of socializing and shopping. Having said all of this, we do continue to see some improvement with each passing month. Given the nature of this new reality, however, we must be cautious about extrapolating this into the future. And therefore, we will continue to closely monitor the situation and constantly evolve while staying committed to investing in our business and in our brands for the long-term success of the company. With that, I'm going to throw this open to your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avi Mehta from IIFL. Please go ahead.
Hi, sir. Sir, I just wanted to take the comment from the press release that you have mentioned about there being a month-on-month improvement in July despite the lockdowns, which is very heartening to read. Would it be possible to share how the July sales have been, or try to get something given this uncertain environment? Any visibility would be very helpful.
As you would imagine, anything specific is not possible for me to.
So even the range would be useful. I mean, just to kind of get a sense how demand is.
So I think you have to read the sentiment. I think what we are saying is the worst is clearly behind us. Okay. With each passing month, we are seeing improvement. But given the nature of this beast, right, 2 steps forward, 1 step back. I mean, we had all our factories running, and suddenly, many factories closed in Karnataka and Assam because suddenly there were local lockdowns. Now those have reopened again now. So this is a really, really dynamic situation, Avi. And, it's not that I don't want to share, but I want to be very cautious about not misleading people, right? And reading trends when there's not enough data points for a trend. But just take it from me that things are getting better selectively, but I can't say that they will stay better permanently, okay, because of the nature of the beast we're dealing with.
Okay, sir. And sir, the second bit was essentially on the gross margin. Now, we have seen some one-off impact which is related to the inventory obsolescence. If we kind of remove that, would the gross margins have improved QOQ and versus fourth quarter levels? And if they have, if you could kind of help us, what has helped that to kind of drive? If you could kind of give
I'll pass this on to Sanjeev, Abhi, for him to give you to share as best as we can. Yeah. Sanjeev.
Sure. So Abhi, hi, Sanjeev here.
Hi.
Absolutely, as you can see, that the gross profit margins, the underlying GA margins, have kind of declined by 508 bits. And of course, I think there are a lot of factors which are playing a big role out here. Couple of things which is worth noting for everyone. Number one, this particular quarter, you will see a franchisee income have been badly impacted. It's quite soft. It's almost down by 40 odd crores. And just like us, where we see our business decline close to 50%, our franchisee business, they've also seen their business badly impacted, right? And on top of it, because of the smaller operations, they had to face a lot of operating deleverages. Many of them have been making big losses. So we decided to kind of, in a spirit of a win-win situation, support our business partners there. So as a result, our franchise income is lower by 50 bits. That's impacting our gross profit margin almost close to 160 bits. Second is in line with the continuation and in line with our prudent policy, accounting policy. You just mentioned about the slots. We have ensured that we continue to provide for slow and non-moving inventories, which could be a combination of raw material, plant material, finished stocks within our own warehouses, and of course, finished stocks lying at the corporations. What you see in the COGS line is everything to do with the inventory which is owned by us, besides the corporations. That had a major impact. We had to take a hit of 21 crores, which has impacted our gross profit margins by about 152 bits. Of course, we also continue to have the 2% on an average inflation, which is impacting the gross profit margin by another 150 bits. So all these three factors put together is about 460 bits, barring other small items. Now, how do we see this as compared sequentially? I think the way I like to decode is when I look at my ENA prices, which is a big component in the COGS, have been flattish. I will not say benign, but at least as we said in the previous quarters, that the peak is out now, and hopefully we should see a softer environment as we move forward. All right. So sequentially, to that extent, the ENA would definitely support in not pushing the inflation any further. Hopefully, as Anand said, if we see some gradual recovery happening in the market, right, we might see a better utilization of the capacity and a better operating leverage coming through. which in this current quarter is really bad because what you see is a 51% down in the NSV, which means our manufacturing capacities have not been optimally utilized, leading to a lot of inefficiencies. So hopefully, yes, this is where we are in terms of the current gross profit margin. Some thinking as we move forward.
Okay. Sorry, you said even glass also, if you could kind of highlight that would be useful. How is that?
Yeah. So glass is the overall industry is in shambles, the glass industry. And over the last few quarters, because of the lockdown situation, because of some other industries, the way it is played out, many of the glass industries have been under a lockdown situation and is gradually opening up. So to that extent, we will see some inflation in glasses, not that it will be flattish. There will be some inflation, but not the kind of inflation we saw a year back. That's for sure. So yeah, I think it's good to kind of build in a normal inflation happening in the glass.
Perfect. This is very intensive and extremely helpful. Just one last bit, Anand and team, was on, we have been extremely prudent in our credit policies. I don't think there's a credit risk with the corporation sales, but I would love to, understand your thoughts on how do we look at corporation sales and the credit that, we kind of provide on some sales. That's all.
Yeah. So I think as compared to many other FMCG players, we are very lucky in a way speaking that 70% plus sales is happening to corporations. And as you are aware, corporations are basically state government bodies. And to that extent, the credit is completely secured. This is a government sovereign debt. So, as such, there's no problem. Some states, yes, we did face delays in payment, which we have called out. Things are improving. But the provisions that you see is essentially not because an expected credit loss might happen. It's just because that the aging of the inventories lying in these corporations, right, is not looking great. Why? Because we had a complete lockdown situation for 33 days. And thereafter, the economy opened slowly. It took time for the supply chain to ramp up. So as a result, towards the year end, when we see towards June end, you see a deteriorating aging situation. Of course, because we are following a prudent policy, we just provided basis this aging. But as we move forward with some better deflation happening and some steady supplies happening, we should see the aging situation improving in the subsequent quarters, and we see part of that reversing. So yeah, it's not about any credit risk. It's just about the prudent accounting policy.
And if I can just add a line to what Sanjeev said, is that I don't think that credit coming in the way as we speak now of sales, right? We're not having to curtail credit because they're not at alarming levels. At a time we used to in the past curtail even sales to make sure that credit doesn't go out of control. They're not in that situation, which actually coming out of the COVID crisis is not a bad situation to be in from a pure credit and cash standpoint.
Yeah, Anand, I would just add something more, and I know this question will come up subsequently, Abhi, so let me just finish this off. When we look at our overall debt situation versus 31st of March versus 30th of June, we are in a far better situation. There's been an aggressive drive on collections. As a result, we are comfortably placed. Our overdues have come down significantly. We have also reduced our overall working capital. As a result, we've been able to repay debts also, right? And this is a time when cash is the king. We are in a difficult situation. Our balance sheet is very, very healthy. Our working capital is right at a very, very optimal level. We've been able to reduce our receivables and bring down the risk actually. So I think it's all to really serve the market well as and when the market opens up.
Thank you.
Okay, good.
Before we take the next question.
Yeah.
We'd like to inform participants that in order that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have follow-up questions, we request you to rejoin the queue. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah. I said good sales performance given 5 weeks of lockdown and 25% sales coming from pubs was not there. So wanted to understand some insights on 2 benefits. So one is of course duty-free shift. So have you seen better performance in the mid and premium in the big cities, I think wherein the bulk of the duty sales? And second, beer companies clearly are suffering because of the bulkiness of the purchase and refrigeration. So any insights if you have versus beer industry, how has the spirits industry done in the 3 months?
Yeah. So duty free, it's just too early to read this, right? So we are doing things as best as we can to woo people who would have bought duty free stocks, right? To woo them through either direct contact or running promotions that are like duty free promotion. Okay, but finally it is duty paid, and the prices are the prices that will be there in duty paid versus duty free. And it's too early for me to see or read that those shares are actually shifting. Anecdotally, I can tell you that some of it has to shift, right? Because if people aren't traveling, and you know that I've said this before in the past, that people don't downtrade easily in this category. If you're used to drinking Johnny Walker Black Label, you don't easily downtrade, right, to Johnny Walker Red Label or to II, right? You will find that few thousand rupees extra so that you can continue to drink your brand of choice. So I think it will, but I don't have enough data points to tell you for sure that it's happening already, right? But I cannot believe that part of it will not move. All of it won't move because there is a price elasticity to demand as well. As far as beer is concerned, again, we do believe that there is a shift happening to spirits, right? And spirits is advantaged over beer for all those reasons. There's an interview in the papers also today from one of the senior beer company leaders who's talked of the fact that beer is stressed because, it's easier for people to just carry home spirits and consume spirits. And because as long as the bars and the pubs are shut, those tend to be more beer occasions when people go to those kinds of venues to drink. Now, your option is to actually take something home and, have that with a small group of friends because you're not having that in open spaces in large groups. Again, the data is just too short, but anecdotally, again, I must say, that is absolutely what we believe is happening and will happen on both these points. Let's wait. So that's beliefs based on consumer trends and insights. Let's wait for data to corroborate that this is indeed the case.
That was useful. My second and last question is on home delivery. So there are two subsets here. One is Mumbai kind of city wherein just home delivery was there. So has the performance in Mumbai also been largely similar to your overall India performance, given there will be more of bigger packs buying by consumers? Second is in the 6-7 states where home delivery has been allowed. Any insights you can share? There was a reversal in Jharkhand, but how is the performance in rest of the states? It's a short period, but any insights?
Yeah, so it's so home delivery itself. So first of all, actually the win, Abneesh, is the fact that it has started in a few places. Okay, that's the big win. Okay, and we need to just evolve this model. Now the contribution is still relatively small in places where over-the-counter sales is also being allowed. Right, it's relatively small, but not immaterial. If I look at places like Orissa or West Bengal, it is not immaterial. Right, so it's picking up slowly. Okay, but if you look at Mumbai, it's either home delivery or no sales, right? So everyone has found a way to contact their nearest store and get home delivery happening because over-the-counter sales are not being allowed. So there it is material. Now, I don't have the data offhand on whether Mumbai is selling in line with what it would have sold if retail stores had been fully open, but I can tell you it's significant. The amount of home delivery sales happening in Mumbai is significant. Okay, so that's really what I can tell you. But I think on this, the fact that the seeds are getting sown for an alternative route to market for the future is the big aha, and we have to sustain this because this can be the biggest unlock for an industry which was constrained by accessibility. Okay,
so why is Bengal Odisha doing better? Why is Bengal Odisha doing better?
No, it's not about doing better. There are national players that have already, they are operating there. So the Swiggies and the Zomatos and the Hitbars are all operating in Orissa and Bengal. Okay. And even Amazon and Flipkart and so on have got permission. Big Bazaar, I think, have got permissions to start in West Bengal and they're all perfecting their model. So I think just more scale players versus a retailer doing the home delivery on his own, right? And there also the ordering can be done more efficiently through online portals and stuff versus calling up the conventional call up. It's like the kirana wala yaar, phone karke bolo aata bhejo. Aaj bol rahe, send Johnny Walker or send McDowell's number 1. All right. So that's what's happening. So it's a crude, it's not an organized home delivery model. It's a local store-led home delivery model, right? And the big bang comes when you have scale players coming in and doing this.
Okay, sir. That was useful. Thank you.
Okay.
Thank you. The next question is from Arnab Mitra from Credit Risk. Please go ahead.
Yeah, hi. My first question was on the tax increase and price increase from states. So we know there's been a lot of 2 steps forward, 1 step back even on the tax. So if you could help us understand at a national level, what is the approximate, higher consumer price that all the set of tax hikes that have happened till now is leading to? So what is the range of higher prices that consumers will have to shell out? And any price hikes you've got from the state governments in terms of your own realizations?
So we have received actually price increases over the last few months in 7 or 8 states. Okay, modest, but still meaningful. Okay, we've got some price increases. So as far as I'm not going to give you an average weighted increase, but let's put it this way: the big outliers were states who had done 70-75% increase or 38-40% increase. Those have corrected, right? Andhra Pradesh is not corrected, but our business in Andhra Pradesh is down to almost nothing because of the route to market changes and regulatory challenges that we are facing, right? Amongst the balance, Delhi and Orissa were amongst the highest states in terms of tax increase. Corrected down, tax increases, which I believe the consumer will accept because it's more routine, right? The range of tax increases there. There are a few states that are still there in the 25 to 30 range, right? Where we are still trying our best with those states to the tax increase down because those states are also seeing a sharp drop in revenue, right? And unless revenue also grows, it's a lose-lose model, right? It's a place for a lose-lose model in business, right? Everybody wants a win-win model. And therefore, we are still talking to those states with data to see whether they will temper it down, right? And then there are lots of states that were more nominal, right? Up to 10-odd% kind of increase or low double-digit increase. And I'm saying unless we see a crash of excise revenues, we're letting it be. And there are also some states that have not taken any tax increase, right? Which continue to operate like normal. By the way, there are also some states that have taken a meaningful tax increase where volumes are doing really well, and are not suffering. So it's just not easy to read because it's kind of a mixed bag, yeah. But giving you an aggregate number is oversimplification of what's happening and almost misleading because the differences can be many. So the way I want you to think about this is to say, if it is more nominal tax increases, which is up to kind of double-digit price increase for the consumer, and the revenues are going up, we leave that as it is. Where the tax increases are in the 30 range, 25 to 50, and where they're seeing a drop in revenue, we are aggressively going after those states with data to try and get it tempered. So that there's some tax increase in most places in the country, but none of them are such that it is detrimental to the industry, right? Or detrimental to excise revenue. So that's the way we're approaching it.
It's very helpful, Anand. And just a last question. I know you answered to Avi's question that there are a lot of uncertainties and there is also restocking in the trade channel, so very difficult to read the near-term trends. But from whatever data you've seen, see, the way I'm coming from is you have that 25% on-trade, which is going to be literally zero for some time. Do you get a sense that the off-trade or the outside on-premise business can actually make up for part of this based on whatever you've seen till now?
So I'm not going to say whether we can make it up, because that's like telling you that we are selling equal to pre-COVID levels. I'm not willing to make that statement today. Okay, Now, some shift from the on-trade to off-trade is bound to happen, yeah. I mean, it's obvious now, right? Some shift of the beer consumption of the on-trade will move to the spirit consumption in the off-trade, right? All this is logical. And it's going to happen, right? Now, the question is how much and to what extent? And will it compensate for the entire on-trade business? And I think I would just be misleading you if I said that it's going to fully compensate for the on-trade business. Now, having said that, it will be our intent to activate the off-trade as best as we can to capture as much of that shift as we can while it's open. Right? That is going to be the endeavor of management and our commercial and marketing team. Right? That's what we are going to go after. Right? And hopefully, the on-trade will selectively start opening as well as people get tired of these lockdowns and say, chalo, yaar, we want to go out and have a drink somewhere. Let's go to a place that's not crowded and let's go to a place that's safe. And that's where our Raising the Bar program comes in. Right? To create those safer environments for consumers. To go out, but go out safely. So I think you'll just have to wait and watch this space. As we get more data, we will share it with you, right? But as you understand, it's just so dynamic that I just do not want to give people the wrong message.
So much and all the best.
Thank you.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, thanks. Hi, Anand and Sanjeev. You did talk a lot about the supply. Yeah, about the supply side. There has been a lot of skepticism on how consumer attitude towards, alcohol consumption will be affected due to this pandemic. I just wanted to check with you if you could tell us about any 2 to 3 key aspects of consumer behavior which have surprised you either positively or negatively over the course of June and July month versus your expectations, say 2 months ago. This could be on, mixed trends. In the earlier call, you had talked about, worries on the downtrading aspect. Has something of that sort, panned out? How has been Scotch sales? Has there been supply disruptions, which have weighed on that portfolio? Large pack sizes versus small ones. Any certain space specific? Any of this, which probably surprised you versus your expectations a few months ago. Thank you.
Yeah, thanks. So, there are obviously shifts that are happening. I don't know about what has surprised us and what's not, but there's shifts that are happening. Obviously, just away from large parties, large banquets, large weddings to smaller groups socializing. Absolute shifts to larger SKUs, right, because of in-home consumption and in-home purchases and people to store at home, which I think is actually a great attitudinal bust, right? We see only the extent of it, but it's a big attitudinal barrier that was there about alcohol at home and consuming at home for a lot of people. And hopefully, that would have broken down as one of the, I would say, tacit benefits of this entire thing happening. Downtrading, I cannot read yet, right? But I will say this, right? And I can't read because the data is too erratic. There is no massive trend of downtrading, right? It's kind of balanced. In some cases, you can see a bit of it. Some cases you don't see the converse, okay? So there's no massive, absolute crash to the bottom of the pyramid kind of shift from prestige and above down to the bottom of the pyramid. There's no massive movement of that kind. And what I do know in our category is that whenever there have been shocks to this category, right, the basic category trend comes back, which is about people drinking better, right, and not downtrading, right? And once the shock is over, I think that our longer-term strategy of focusing on premiumization, investing behind the more premium brands, I think that will absolutely continue, right? Because I think that strategy will be the right strategy, right? When peace plans come after this war period is actually over, right? And then the other consumer change, obviously, is the way of shopping. So the way of socializing is changing. People are not going out, so there's so much more explosion in shopping from home. And that is an opportunity that was shut for us till now. And, that could open a change. And maybe that's been one of the surprises about how permissions for home delivery and e-commerce in certain states started. In peace times, my God, we would have gone on and on and on lobbying with the state government. We would have got the permission, I can tell you that, right? And the fact that it started, and hopefully other states will follow. And that's, our effort anyway. So those are the broad trends. Now, I'm surprised by the amount of shift that that at least we are reading from beer to spirit. I don't think we anticipated that, because we don't also read beer as closely, right? Because we're not directly in that business. And that shift, right, and the function of both the on-trade, the bulk, and the need for chilling, space, fridge, right? I don't think we read that much. So I will say that's a positive surprise, right? Don't feel the numerical impact of that. But that's a positive surprise and a nice surprise. And, in crisis times, it's good to have a few positive surprises as well, rather than only negative surprises we're all getting used to. So those are the kinds of things, Latika. But I will tell you this, that we have our insights team tracking consumer trends continuously to keep a finger on the pulse, because it's very dynamic. And we are redeploying resources in the business towards emerging opportunities in an absolutely agile way, right? So we said suddenly that, listen, key accounts is shut right now, on-trade is shut. Let's move many of those people to focus on enabling home delivery and e-commerce to happen, right? So the way we're playing this game is to read consumer insights and trends, pick the ones that we believe are meaningful for the business, and put resource behind them to exploit that opportunity and try and be first off the block to make it happen. So that's what I can tell you that we're doing. We haven't just left it to feel. We're actually doing it in a scientific way.
Sure. And just on Scotch sales, is there any supply disruption which is still there on Scotch imports? Or it's normalized now?
Import supply disruption? No. Nothing material. No. Nothing that is coming in the way. Nothing that is stopping us from doing what we need to do in terms of our business. No.
Sure. Thank you so much.
All right. Thank you, Ravi.
Thank you. The next question is from the line of Amit Sinha from Macquarie. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. My question was on the competitive intensity within the whiskey space. So just wanted to understand, is it fair to assume that the larger players and the bigger brands would have done well in the last 2 months or so? Any color on market share, even if it is a very small period, will be helpful.
So we don't have data to share really, but I can say this, that we would believe that companies with scale and with strong cash flows should be able to come out stronger from a situation like this. All right? I don't have data to bear it out, but that's the belief, that we have the staying power, we have the cash, we have the relationships to leverage that to our advantage. Okay? So that's what I would say. I obviously can't tell you about shares and stuff like that, but what I will tell you this, that that our ability to start up after the lockdowns were lifted, right, has been better than what I would have expected, particularly in terms of supply chain ability to service the market, right? I think we were pleasantly surprised about, I was really worried, by the way. It's very easy to stop a supply chain, but to restart a supply chain, starting from your vendor's raw material to the vendor, to the truck, to arrival in your factory, to making it in your factory, then trucks to send it, that whole thing had been stopped suddenly for 6 weeks, right, or 5.5 weeks, right? I've been pleasantly surprised by how, given the strategy that we pursued of keeping our CMUs and franchisees supported in the business, making sure their employees were paid, right, minimize the impact of migrant laborers on our supply, those kinds of things, I think we've been pleasantly surprised at what's happened. And therefore, I think in the opening up, right, I think we have done well, right, in our ability to supply when things open. Because in the beginning, it was all about who can supply, right? I think we've done well there, right? I'm pleased with how we've done there. But that's really all I can really share. I can't share relatively, small players, big players, what's happened at this point.
Sure. And in that context, I mean, how would have your franchisee, because you very clearly mentioned that, the franchisee income during quarter was hit. And so given that these guys are smaller with, lesser resources overall, supply chain disruption would be much bigger. So is it fair to assume that in the near term, franchisee income will continue to be hit?
That's absolutely right.
Okay, sorry, go ahead.
Yes.
Go ahead.
Yes. So just like our business have been impacted this quarter, franchisee business have also been impacted within even of the bigger scale. As you rightly said, there are smaller operators. As a result, they do feel, get into a lot of inefficiencies during this time. What we have done is just to ensure that we create a win-win situation and a good relations with our working partners here. We have decided to share the pain also with them. So while we have a contract with base of fixed income, we always cannot get into a situation where they say, hey, you make losses and we'll make all the profits. So that doesn't really work with us. So we have ensured that they do get their fair share of income, and we have kind of worked together with them. This quarter, as you would see, our franchisee income reported is fairly soft. It's about 40 odd crores lower. When I look at it on an annualized basis, in a pre-COVID environment, we earn about 160 odd crores of franchisee income. Our sense, and it's too early to really give a number to it. We don't know how the train will pan out, but of course the business will remain slow, and their businesses will be getting impacted. We think that the franchisee income should be about 40% probably lower going forward in the next few quarters. But we'll keep on revisiting and recalibrating these numbers as we move every quarter, because it's too difficult to say, how exactly their business will, recover from the crisis. And it's the same situation for us. So we kind of living and breathing every day, every quarter.
Yeah, sure. My second question was on your basically McDowell number 1 renovation, and just wanted to ask, so in how many states have you relaunched the new bottle, and how has been the consumer response to that?
So we are in about a third of the country, okay? But we are rapidly rolling it out during this period, right? So over July, August, September, we'll see a rapid rollout to at least 2/3 or 75% of the nation in terms of the weighted contribution of the brand. I'll say that I'm very encouraged by the response from the marketplace. Obviously, again, the reading has been complicated because, things started, things shut, and so on. But I would say that by and large, wherever we have gone in, right, I think the response has been very encouraging. And like I said, I want more and more consumers across the country to experience this new bundle in terms of the new McDowell's number 1. So we're continuing to roll out, and that you only do if you feel that you've had your action standard kind of met in places where you started rolling it out, right? So we are extending it now.
Sure. So just very small bookkeeping question. So you mentioned that aging-related provision impacted the other expenses this quarter. Is it possible to share the number of this provision?
Sanjeev, I think Yeah,
it's about 44 crores.
Okay. Thanks a lot, sir. That's all from my side, and all the best.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. We take the next question from the line of Manoj Menon from ICICI Securities. Please go ahead.
Manoj?
We seem to have lost the line for Mr. Manoj Menon.
Yeah.
We move to the next question. The next question is from the line of Harit from Investec. Please go ahead.
Hi, team. Good afternoon. I just had 2 questions. One was on the franchise income again. So when you say that you've booked 40 crore lower number this quarter, it would basically imply that the franchise income is next to nothing in this quarter. In that context, I also wanted to check that are these very temporary arrangements now with the franchisee to support them, and once things get back to normal, you will kind of get back to your normal run rates on the franchise income?
Sanjeev, you're on mute, I think.
Sorry, can you all hear me? Yeah. The franchisee income for this quarter is about 10 crores. And for a similar, I think the corresponding quarter you had about 50 odd crores. So as compared to 50 crores, you see about 10 crores now. Hence, there's a decline of 40 crores. Now, this 40 crores is basically a true up of impact that we had on the franchisee business. And of course, we saw a declining business right from the beginning of the first quarter, with overall, the GDP and the economic conditions were going down south. And of course, a much bigger impact during the current quarter, where we saw a big lockdown. As a result, when we discussed with the franchisee partners and we looked at the income earning of the operations, we felt that it's quite prudent that we kind of share a part of the pain. And hence we kind of let go about 40 odd crores. And as I said, going forward, looking at the current state of the economy, the way things will move, the impact of the pandemic, we don't really know how things will be. But our sense is the franchisee income would be about 40% lower. Now, we'll keep on revisiting that every quarter. But yeah, I think the business will be down, and to that extent, the franchisee income will get impacted to the tune of 40%.
Okay. My second question was on the new launches for Number One and Royal Challenge. Is this change also to do with the mix in terms of the liquid? And if so, is this a more premium liquid mix that you've changed there, or is it just a packaging and communication change?
It's a all new McDowell's and Royal Challenge, right? So, in McDowell's specifically, pretty much all aspects of the mix have been improved, including the liquid. Okay. Now, whether it's more premium or not, I don't know, but consumers prefer it to the earlier liquid. Yes. And our in-market feedback that we have. Royal Challenge is also an improved liquid, and again, that is preferred by consumers based on our test results. Okay, so it is not just within quotes a packaging upgrade, which is more smoke and mirrors, right? It's not old wine in new bottle, to put it literally. Okay, It is new wine in new bottle. So that's how I would like you to see it, and it is therefore a comprehensive improvement in the product offer and the mix.
That's very helpful, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Vishal Viraya from Aviva Insurance. Please go ahead.
Thank you for the opportunity. Sir, a few questions. The first one is on what would be your capacity utilization for July, if you could give us some perspective there.
I can't give you a capacity utilization number, right? I would only say this, that we are not capacity constrained, right? Unless it's shut, of course, right? Which is also the case in a few places. And therefore, it is now demand-led production. So the capacity utilization is based on the demand, right? And we are working as hard as we can to make sure that our factories are able to meet the demand. And I would say, by and large, right, it's demand-led now and not supply-led. Right? So I just say this, we can produce in all factories to pretty much pre-COVID levels of capacity. So if the demand was at pre-COVID levels, we could produce at pre-COVID levels in our plants, right? With all the new norms in place.
Mm-hmm. Okay. So second question is pertaining to this. For this quarter, we would have seen higher sales in the hinterlands, semi-urban markets and rural markets as compared to the metros, which were shut due to lockdown. So is there a shift that you would see that some of these customers who are in the semi-urban India or rural India are demanding a different kind of product, or the premiumization that could have happened has not happened because of this geographical change in distribution, or um, it is just because of COVID that people are downtrading?
No. First of all, I'm not clear that people are downtrading, like I said earlier, right? And if they are, then it's because of COVID. Also, you see, most of our sales happen in urban and large towns. The consumption may happen as product finds its way through unconventional challenges to consumers in smaller towns and rural. Okay? Now, so that's how it flows. And I don't think they want a different product, right? But we have products that can service the bottom of the pyramid to the absolute top of the pyramid, right? And they could move to any of our brands, within that top to bottom of the pyramid, right? I don't think they want something different or new, right? They may choose something else from the portfolio, right? In the short run, if they choose to downtrade because of economic challenges, job loss, whatever else it may be, right? Then they will hopefully choose one of our brands that are there lower down, right? And then hopefully come back when the sun shines again. Hopefully they won't stay unemployed. Hopefully they'll come back. And they'll have the same aspirations when they come back that they had before, right? And they'll come back and then hopefully buy again. So I think any trends that we are seeing right now, we have to believe they are shorter term and COVID related. Longer term trajectory, we believe, at least right now, will go back to where it was pre-COVID. The only question I do not know is how long it will take. Right? That's the only question I don't know the answer to.
Okay. Just one last question on the receivables. Could you give some perspective as to what is the increase, if at all, in the receivables from the states as of 30th of June?
Right. Increase in receivables, Sanjeev, are we sharing that now?
Yes, I can give a general understanding of this. While for this quarter we don't report our balance sheets, we will not see the numbers, but I think it's suffice to state that we are kind of in a much better situation when it comes to the overall receivables. Our overall receivables have come down. It's much better. And so is the health of the receivables. Our overdue receivables have also come down. So I think we have been very aggressive during this lockdown situations and also in May and June to ensure that we collect better and ensure that we're kind of ready to serve the market. And the market is not constrained because of the credit, and we have done quite well. This has also resulted in an overall reduction in working capital and overall reduction in our debt situation. While I'm not reporting this quarter numbers to you, when you see the H1 numbers, you'll see for yourself.
So when you say reduction, this is from 31st March to 30th of June. That is,
yes.
These are the reference
Yes.
points. Okay.
Yes.
Thank you very much. Thank you very much for your question.
Thank you.
Thank you. The next question is from Pulkit Singhal from Motilal Oswal Asset Management. Please go ahead. Mr. Pulkit Singhal from Motilal Oswal, you may go ahead with the question.
Maybe he's not there. If I can just announce to everybody, because apparently there's still a large number of questions in the queue, and in order to accommodate as many as we can, we're going to extend the call from 15 minutes till 1:15. So because I just want to make sure people don't log off before that. So if you still have a question and you want us to answer it, then we will stay on till 1:15 to help you understand the situation as best as we can. Sorry, back to the question.
Yeah, hello, am I audible?
Yes.
Yeah. Thank you for taking my question. I just wanted to try to understand the mixed impact during the quarter, because we've shown a similar kind of declines in P&A and Popular. At the same time, we know that the on-trade channel is a higher margin one and has been impacted more. So I'm not sure how is the mix change within P&A and why has there been similar declines in P&A and Popular?
My advice is don't try and read into this, right? I mean, this is such an unstable quarter, right? And what happened may be a function of just which factory was open where in which state and which outlets were open or which outlets just shut. And we are trying to put read a principle or a trend with that data. So my advice is don't look at it because we can't read that. at this point in time. And we should just wait for a bit more data. Right now, all I can tell you is this. There is no clear trend that there is down trading from P&A downwards, right? There was some short-term Scotch disruption and so on and so forth because suddenly weddings and banquets and those went away, the off-trade shut, right? We have to see how much of that will shift to the on-trade, to the off-trade, and people will take it home, right? Let us just wait for a few more data points, right? But there is no clear trend, by the way, of down trading within P&A or from P&A to popular, right? The data does not bear that out, right? And there's too much of noise in the data, like I said.
Sure. The second question is on gross margin impact. I mean, if I just add back the obsolescence impact as well as some part of the franchisee income, that is, add back the 20 crores, not 40 crores entirely, we are coming to almost a 44.8% kind of gross margin for the quarter. Given that, I think RM prices are also a bit benign. So is that the right gross margin number to look at going ahead? Because this is probably the worst quarter. And I'm just trying to understand how should I look at this line item going ahead.
It's very difficult to decode how the gross margins will look going forward. But I think some of the things that you see, as you rightly said, the ENA prices perhaps have stabilized. The glass prices would be kind of in the inflationary zone, moderate, and not the kind of huge spike that we've seen in the past years. We also think that the flops that we've seen this quarter is kind of massive because of prudent policy. But with the market opening up and with the depletion happening, the aging will improve, and to that extent, the flops would be lesser. But we would not like to decode and try and, extrapolate from these numbers how the gross profit margins will look like going forward.
Oh, sure. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Abhishek Joshi from CGS-CIMB. Please go ahead.
Yes, thanks for taking my question. So, a few weeks back, our parent company, Diageo, had announced that it would be sold in paper bottles from.
I'm sorry, I'm just not able to hear.
Yeah, can you hear me now?
Okay.
Yeah, so a few weeks back, Johnny Walker, Diageo had announced that they would be selling Johnny Walker in paper bottles. So, would we be doing the same for McDonald's brand next year? Like, any thoughts behind it? And how does it, if yes, then how does it impact some gross margins compared to Johnny Walker?
No. So listen, I think. So first of all, the Johnny Walker has to come in that packaging. It does get distributed, and then we will see if it comes. There's no plan to move McDowell's number one to that kind of packaging. But also remember that in India you have something called Tetra Pak. And a large part of our volume is in Tetra Pak. And that's a paper-based packaging at the end of the day, right? Yes, it's an aluminum foil, there was paper-based packaging. And we have introduced number one in Tetra Pak in the state of Karnataka, and it's doing very well. The very small SKUs only, 90 ml and so on. Right? We've actually done that, and it's doing very well. All right? Now, having said all of this, we are constantly looking at packaging innovation, which on our brand, which will upgrade the image of the brand, which will aid functionality, reduce spurious and counterfeit, and will also lower cost. So there's a constant endeavor to look at different kinds of packaging formats, and we will continue to do that.
So what would be the contribution of our sale from Tetra Pak normal times?
No, so, if you look at our total business, right, popular plus prestige and above. Prestige and above is negligible, by the way, in Tetra Pak. Almost zero. Right? Very, very low. But if you look at our total business, a quarter of our business is in Tetra Pak. All our popular in Karnataka is in Tetra Pak. Some of our volumes of popular is in Tetra Pak in West Bengal. Okay? And some of it is there through franchisees, right, in certain states like UP. Right? So Tetra Pak is a very big contributor to the packaging for our popular business.
Thank you. That's all from me.
Thank you.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Hi, good afternoon, and thanks for the extra time. So the first question is on sort of digital spending, given that, in-store marketing spends would have been lower, I'm assuming, this quarter. Has there been any sort of thought or increased spending on digital spending? And do you see any differences in reaching out to consumers using digital?
So absolutely the intent is to move more and more media towards digital, and particularly given the digital explosion that has happened and the data consumption explosion that's happened with COVID, right? Absolutely, that's the place to be. However, Diageo globally and we in India believe in doing the right thing. And as you may have read, Diageo is amongst several other companies who have decided to stop paid advertising on certain global digital platforms. Okay? Now, so therefore, we are absolutely honoring that commitment that has been made, but we are looking at alternative ways to still create the reach and impact that we want through digital. Okay? So absolutely that's our intent, right? And that's our work with our agency partners to make that happen, and particularly to support our renovation, right? I would say it's digital first in terms of the media choice that we're making, right? How best can we make an impact, starting with digital and then following with others, rather than necessarily the other way around, right? Because in this environment, I think that's what really works.
No, I understand. That's very useful context. And in terms of the cost of digital, is there any sort of way to measure the efficiency versus, say, your traditional in-store advertising?
No, there are many ways to measure it, and I don't have it on my fingertips now, but there are obviously many ways to measure. And digital, by the way, is far more measurable than conventional media, right? In terms of the impact, the number of people who viewed part of it, viewed all of it, of the content, etc., etc. But it's not only about viewership, it's also about engagement and involvement that we're able to generate. And that comes back to how creative is your digital work, right? Because it's not only about reach, it's about impact and engagement of the consumer. And there are ways to measure a lot of this stuff, and we do, and we have very robust tools, by the way, in our business to measure the ROI of our advertising. Okay, very robust tools. In fact, they are global Diageo tools which we also use in India. All right, and we use that constantly to prune and tweak our media plan, and that's what we will continue to.
Thank you. And lastly, just to follow up on the franchise economics, has there been sort of any fundamental change, or could you see any of the franchisees sort of stop doing the business with you, and in that situation, or would you have to appoint new franchisees or take back that business? Any situation of that sort that you are in?
Let me just say that I'll take this, Sanjeev, because it's just about, so philosophically, there has been no franchisee who come in and thrown the towel and said, I can't do business with you anymore. Right? Now, we are constantly looking at how to improve our franchising model. So, for instance, one of the things we have said is we are going to institute a principle of doing joint business plans with our franchisees to support them in areas of pain that they may have, where we can bring some expertise to the table. Okay? So whether it's on brands or whether it's about sales or even if it's about efficiency, what can we do to help and support them? Because it's our business also at the end of the day, not only in business, right? So we're doing that. Equally, we will constantly keep looking at whether franchisees are delivering effectively for this business that they're supposed to be doing, right? And everyone is up for scrutiny on performance. We are, and so are the franchisees. And if people do not deliver, right, then we will look at ways to improve them or split with them if we have to, but there is no plan as of now.
Thank you. Before we take the next question, we would request participants to please limit your questions to one per participant. The next question is from Bharat Shah from ASK Investment Managers. Please go ahead.
Well, we all understand what happened to the sales, and given the situation, what best could have been done in terms of managing that was done. But what I wanted to understand was how did we internally deal with, probably given the challenge with the expenses and managing the profitability, the challenge of the situation. So what I'm surprised by is losses at operating profit level. I mean, reduction
losses at operating profit. Okay.
Was understandable, but operating losses is something that surprises me, and I want to see, understand what kind of fixed cost and variable cost, and what kind of efforts have been made to contain the impact.
Yes. So Sanjeev, he wants to really understand what's been done on our cost base during this period, and he is surprised by the losses at an operating level.
Right.
That's the question. So maybe I'll hand it over to Sanjeev.
Yeah. So maybe first on a philosophical level, we all know that because of this COVID, the last quarter, the quarter ending June, would be a complete washout, right? And to that extent, when I look at the analyst consensus as to what they felt, how the profitability will look like and how the P&L will look like, just to share the numbers, most of you in your consensus said that the top line would decline by close to 50-51%, right? And we see the real numbers is close to that. In terms of the EBITDA, right, and this is your question on what could have been done better, the consensus was close to about 11 odd crore of positive EBITDA, whereas for practical purpose, we landed up with close to about 80 crores of losses, right? So there's a deviation of about 90 crores.
Sorry to interrupt here for a second. Consensus numbers is a market gain, and that is not a gospel truth, one. Secondly, if you look at scores of businesses, results which have come out so far, in case of many of the companies where considering the kind of obvious challenge, there have been far more clear, visible methods which have been at work to create a financial impact much lower than what one would have thought, or to actually improve and give a positive surprise. So I'm more coming from that context. I mean, in a market, consensus numbers and all this is a popular sport, but I don't think we should pay much attention to that.
You're right. I was just setting the context and I was coming to exactly what you're thinking about. So yeah, for the time being, let's forget consensus and let's look at what it is. The fact is, this business as compared to any other business was completely impacted, right? As compared to many other FMCG players. We were in the situation of a complete lockdown for 33 days, and thereafter a supply chain resumed normally. And a lot of effort was put in to kind of almost get to a pre-COVID level in terms of the readiness of the supply, so that as and when the market recovers, we could kind of completely look at that. What have we done interimly to ensure that we can at least, minimize the impact of the losses? If that's a question to you, I think we have put a complete break on all the discretionary costs. Today, when you look at our overheads, while on a pure reading of the reporting numbers, it's about decline of 3%. But because of the one-time impact that we had, if we had not had those prudent accounting policy, which is more of a non-cash charge rather than a cash charge, our total expenses would have been lower by about 22%. Right? So that's a big impact in terms of the effectiveness that we're trying to produce by having a complete control on the cost element. Now, a lot of this prudent accounting policy, which is nothing but provisioning for the aging inventory, will reverse, as I said in the earlier question, because as the market is opening up, we'll see more deflation happening, and the agings of the stocks will improve, leading to a substantial improvement, in terms of this provision. This quarter, which is of course not also the right thing, but we also realize if there's a complete shutdown, doesn't make any sense for us to keep on doing on the media advertisements, right, and keep on spending money on the A&P advertising promotions. So as you can see, there's a significant cut down on the A&P spends as well this particular quarter. Now, of course, because we are a huge manufacturing footprint company with 47 locations in an environment where your sales are down by almost 50%, your manufacturing fixed overheads don't get fully absorbed. A large chunk of the manufacturing unabsorbed fixed costs are also sitting in these numbers, which hopefully, as and when the market improves, you'll see some operating leverages also coming in. What have we been trying to do? We're trying to have a very clear policy on curtailing all sorts of discretionary spend. We are trying to really manage our A&P, which is make it much more manageable in terms of effectiveness and efficiency. We are trying to really cut down and on all sorts of needs for based on war, right? We have really managed our receivables very well this time. We have really managed the cash situation very well, as I said, but we've been able to reduce our overall working capital under this scenario. This was quite challenging, but we did that. We dramatically, I'm not giving the numbers, but it's a material reduction in the debt that we also accompanied. So all the steps that the company could have done in terms of protecting the P&L, the shape and size of the business, making the business much more healthier, having a much stronger balance sheet, right, has all been done. Everything that we're doing is only going to, make us stronger and emerge stronger as and when we move into the next phase, as and when the unlock happens. And we are very confident that our performance, it should certainly start improving as and when the market opens up. We are actually very confident on all the measures that the company have taken so far. It was an unprecedented environment for all of us, reading the consumer trends, the customer's requirements, trying to understand when the lockdown will unlock or when another lockdown happens was very, very difficult and challenging for all of us. But we are very happy that as we speak to you, we are in a complete readiness on our supply strategy, the complete readiness in terms of serving our consumers and customer better. So I think we have come a long way. And I suppose with this, we're almost coming to an end of this session. So maybe we can, Anand, you're fine, we just take the last question.
Yeah, so we'll take one last question now before we close the call.
Sure, thank you. We take the last question from the line of Vishal Punmia from Nirmal Bang Institutional Equities. Please go ahead.
Thank you. My question has been answered. Thanks.
Okay, then we'll take one more.
Sure, thank you. We take the next question from the line of Shirish Pardesi from Centrum. Please go ahead.
Hey, hi, Anand, Sanjeev. Thanks for the opportunity. Just a follow-up question on the, you said that about 7 corporation markets you have got price increase. Is that right?
No, I never said 7 corporation markets. I said 7 states.
Yeah. So 7 states we have got the price increase.
Non-corporation markets. Yeah.
Yeah. So what kind of price increase we have got?
So I'm not getting into the specific percentages. They're all modest.
Give the range.
There's not. Yeah. I don't have the range handy here. It started with Telangana, and then there were other states. But I would say they're ballpark. They're about 4-5% kind of increases. But we can check that for you and get back. But it's a range, plus minus.
Sure.
Yeah.
Sure.
Ballpark would be, I think, 4 to 5% in those states.
Sure. Related to price increase, we have launched 2 new products, RC and McDowell No. 1. What kind of price premium we have revised in these 2 products?
No, we've not. It's not that easy to take up the price in this industry, So you have to improve your product offering and just be more competitive. Right? Now, we have a strategic view of where our pricing should be, but you'll find that because of history, in some states, you might be at a premium, some states you might be at par with the segment and so on and so forth. Right? So I would say that don't think of this as the ability to take a premium. Yes, we will try and take a premium as and when we have the flexibility to do so, but has the opportunity to at least grow share and grow the segment. right? And that would be, I would say, the primary.
Okay. Just last on CSD business, if you can give some color how the things are shaping up there.
The CSD business is fine. I think they're not under lockdown now. By and large, I think the government CSD canteens and messes and so on are operating as far as I know. Right? And the CSD business is fine. There's no real problem that I see with the CSD business as of now.
Okay. All right. Thank you and all the best. That's it.
Okay. Well, thank you, everyone. I just want to thank everybody for staying on for this call and your continued interest in United Spirits.
Thank you very much.
Thank you very much. On behalf of United Spirits Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.